Welcome everybody to the SNN Network Summer Virtual Event. I'm your host, Robert Kraft, and I'm very pleased to introduce our next educational panel, as well as moderate our next educational panel today. And this panel is titled OTC Markets 2021, Cross-Trading, Latest News and Updates. So we're going to be going a full deep dive on what's been going on at OTC Markets, some of the new rules, trading statistics, the whole bit. So joining me today for this panel, we have a great panelists for joining me right now, starting with Violet Pagan. She's the Vice President, Head of Business Development for Australia and New Zealand at OTC Markets Group. Andrew Reilly, Partner at Rimon Law, based in Australia, as well as Stefan Spath, Managing Director at MCAP. So thank you all for joining me today, and let's dig right in. Why not? I want to start with everybody just giving a quick bio and also overview of your firms, and then we'll go from there. So Violet, let's start with you.
Oh, hi. Well, my name is Violet Pagan. Robert, thank you for this opportunity to join this panel today. Appreciate Stefan and Andrew joining as well. So as a bit of a background, I am from OTC Markets. I'm the head of business development for Australia and New Zealand. And in my previous life, I was at the Depository Bank at Bank of New York Mellon, covering Australia and New Zealand. So our firm, OTC Markets, is an alternative trading system where there are over 11,000 securities quoted on our market. And
Andrew, give us a little background and on your firm.
Appreciate it. Thank you, Robert. So my name is Andrew Reilly. I'm a U.S. securities lawyer based in Sydney, Australia. As you can tell by the accent or lack thereof, I actually am American, grew up in California, but for the last 24 years, I've been advising Australian companies in raising capital in the United States. So, and a lot of companies, probably about 30 or so on the OTC markets, as well as NASDAQ and regular private placements. So it's a great opportunity to join you today. My firm, Rimon, is actually a Silicon Valley-based law firm, founded about 14 years ago. They've been growing across the US and the world. So I am the Australian office for Rimon. So happy to be here.
Thank you very much, Andrew. Yeah, it's the Trans-Pacific accent. For those who've never heard the Trans-Pacific, it almost sounds kind of Southern US in a little bit. Yeah.
But California, it's California with an Aussie lilt. But hopefully you can all understand me.
Oh, I thought he was from Kansas when I heard his accent first, but maybe it's wrong.
You're a Floridian.
Very good stuff. All right, and then also joining us today is Stefan Spath. Stefan, can you give us a quick background as well as overview on MCAP?
Sure, of course. MCAP is a small private broker-dealer. We're based in New York. We specialize in making markets in non-US securities that trade over the counter. And we've been doing this as a team, the same team, since 1997. So we developed a specialty in the proper market making of foreign securities. I've been in charge of the advisory department for assisting non-US companies cross-listing into the US since the beginning of OTC QX and QB, which was 2006. My background is in finance. I'm trained as an economist and an investment banker. And we know the particular situations that foreign companies face and need to be advised on for how do they make the transition to become listed in the United States. And that's what we do. We make markets in 3,000 securities. We're heavily involved in Australian securities, as well as Western European and Canadian. And we have an institutional customer base. It's made up of the largest broker-dealers in the US, bilge bracket firms that everyone would recognize. And we get customer order flow once we introduce new foreign securities to our trading sheet. And that's where we fit into the whole picture.
Very good. Thank you, Stefan. All right. So to give the audience a quick roadmap of where we're going with today, we're going to start off with an overview of all the levels, as well as an update on OTC markets, looking at the increased trading activity that's happened and maybe some reasons why. Also then going to making markets and how some of the new rules that are out there might affect investors. And then from there, going to international companies and how maybe some of the new rules are just some statistics, what's been going on in international markets when they're looking at listing in the US or getting a listing in the US. So, or trading in the US. So with that, My first question is going to Violet on this topic of overview of the levels and update on OTC markets. So as I said, we're seeing increased trading on OTC markets. Can you provide us an overview, some of the reasons why, what's been going on in the last, let's say 12 months?
So during the last 12 months, we've been seeing an increase in the amount of companies that are upgrading to our premium platforms. So we now have about 500 companies on our OTCQX platform and about over 1,000 companies on our OTCQB platform. So of the 500 companies trading on our OTCQX market, there's an average daily dollar volume of over $1 billion. And on our OTC QB platform, there's a average daily dollar volume of over 200 million. 200 million. So what we've been noticing is that, with the lockdown, a lot of companies are doing virtual conferences and accessing the U.S. market virtually, just like yours, right? And there has been an added especially in Australia, an added level of interest in the resource companies, the lithiums, the lithium manufacturers, the rare metal earths for, the technology boom and the iPhones and all of these electronic cars that are coming out, with Elon Musk. So we have been seeing a huge uptick in the resource space in Australia. And we've recently upgraded about 40 companies onto our platform, and trading has been increased significantly for those companies. In terms of the tiers, there are 3 main tiers of our market. There's the pink securities, the OTC QB securities, and the OTC QX securities. So the pink market is what you call a broker market. There's really no company interaction with the securities that trade on the pink market, or there's limited interaction. And by a broker market, it means that unlike in the US, unlike many other markets, broker dealers can decide to trade a security based on the demand from an investor. So because of that, Pink has all sorts of different companies trading in that particular platform. So there are bankrupt companies, there are distressed companies, as well as large international companies. So anything where an investor wants to trade a security, a broker dealer can get a ticker symbol from FINRA, which is our financial regulators, and trade that security on our Pink open market. So our OTC QB and OTC QX market are our premium markets. These markets where companies have taken more of an active engagement role in their trading in the US. So our OTC QB market, simply put, is a venture market. It is the venture market in the US. So for early stage developing companies with limited financial requirements to trade on that marketplace, but significant disclosure requirements for brokers such as MCAP to be able to trade that security. Our OTCQX market is our best market. And this is where you'll find companies with high financial standards, corporate governance. There are no penny stocks on the OTCQX, or no penny stocks can trade on the OTCQX. So OTCQX companies have higher financial standards, corporate governance, higher disclosure requirements. That said, the recent FCC changes to Rule 15C211 recognizes the importance of disclosure and transparency. So companies listed on our OTCQX and OTCQB marketplace provides for a level of disclosure and transparency required for the rule change. So when investors are looking at suitability for investments, they should take into consideration the market tier on which the securities trade.
Very good. Thank you for that full update. I mean, there's a lot to break down there. And if I may follow up real quick, I mean, you've been having ongoing conversations. You know, you have a lot of clients. You're head of business development for Australia, New Zealand, and you're dealing with companies at many different levels of their life cycle, evaluating whether or not they're ready to do QB or QX listing. So, what have those conversations been like in the last 12 to 18 months? Have they been more apt to want to start trading in the U.S. as a result of just all this activity over the last 12 to 8 months with, you know, staying at home, COVID and whatnot? You know, what's been some of the trends you've been seeing?
So I think that we've seen a lot of technology trends. For example, BrainChip just recently upgraded to our QX market. They're an alternative AI company, not alternative investment, but what is AI?
Artificial intelligence.
Artificial intelligence. So yeah, they're an artificial intelligence company. They have an office here in the U.S. and they're looking to garner more U.S. investor because, again, the U.S. has the deepest pool of capital, the deepest pool of investors. So it would behoove them to trade in this space. So yes, so we're seeing BrainChip just recently upgraded. We're seeing companies like Champion Iron, Novonix, pharmaceutical companies. It's been a really fantastic 6-month period for Australian companies coming to our marketplace, and they are coming because they are looking to access the U.S. capital markets again, which is the deepest pool of investors available. Australia is a smaller country. It doesn't have a deep investor base, although it's a very it's a country that's advanced, so it's not an emerging market. So you know, it's just sort of tagging on to the U.S. to garner the interest and visibility that they're looking for.
I mean, it's an interesting convergence of events. I mean, look, on my podcast network, on Planet MicroCap, and also on the Investors Roundtable, we've had a few shows where we've talked about how a lot of individual investors, kind of like DIY retail investors, are looking abroad. You know, they're looking outside the U.S. And when these companies that have that ASX, TSXV, TSX, CSE listing, or now NEO listing, you know, want to access U.S. investors, there's this interesting convergence happening where, you know, U.S. investors are now like, oh, well, that makes it a little bit easier when you have when you're on the QB or the QX.
And absolutely, we have like companies like Roche, Adidas, Fortescue, Illumina. These are big name companies trading on our marketplace, either the Pink, QX, or QB marketplace. So it's U.S. investors have their choice of securities, and they can assess the suitability for their investment requirements. So it's a good marketplace to look at.
Very good. All right. Well, I'm going to now transition to the second part of this panel today, because you brought up 15C to 11. This has been a big topic that we've also talked about on one of the recent episodes of the Investors Roundtable, with actually a bunch of investors that tend to invest in dark stocks, you know, companies that are on the gray sheets and whatnot. So, you know, now want to transition to Stefan for this question. You know, will the changes in Rule 15C to 11 affect the way market makers can trade and quote a foreign security?
They do, to a certain degree, because some of the changes involve us ensuring that companies that want to cross-list into the United States qualify for the exemption, which involves some activity on their part as far as being current in their local market. If they're not current, they have to become current. Because if they're not current, we're unable to publish a quotation, which means they're going to be banished to what we call the gray market, essentially making them invisible. And so you have a situation where there are multiple foreign companies in Australia and around the world where U.S. investors have already acquired the stock. And if the stock is no longer quoted on the QX or the QB, or in the lowest tier in pink sheets, then the investors that hold these securities in their portfolio are unable to transact trades. And so they're going to become very quickly, in about 5 weeks, they'll be in a situation which is going to make their shareholders very upset because they can no longer transact. And so there is going to be a rush to figure out how do companies that actually want to have a U.S. shareholder base continue to be in a position that allows their existing shareholders to trade a stock. Now, the other part of that is that if you are a company that sees the value in expanding your shareholder base to U.S. North American shareholders, what do you do to ensure that they can become visible? And so some of those rule changes have been spelled out, and we're in the process of trying to help companies understand what is necessary to do the movements necessary to ensure that they're not going to become invisible. And so we're working with Australian companies through Violet. We have MCAP and OTC markets really collaborate on a lot of projects. And this is one of the biggest ones in recent history, because this is one of the most fundamental rule changes in recent US securities law. So, but to answer your question from a kind of a standpoint of what will change for us, come September, there's going to be a number of securities that we are no longer able to quote, which means if our institutional customers want to buy an Australian security, but they have not adhered to the new rule change, we can't trade them. So when an institutional customer says we want to buy 1 million shares of XYZ mining company, we can't do it. Nobody can do this. And so it behooves them to figure out themselves or with our guidance, how do you remain visible? And so that's the major change. The other change basically is that we have companies that are currently tradable in the gray market, which is the worst tier to be in, because when institutional competitors want to buy or sell to us, we have to get 3 quotes, we have to call our competitors, we have to figure this out, and it's a very inefficient process. It's about to become more inefficient. So that's the major difference between how we will conduct business. But having said that, I think it's actually a very good development, because the whole point is they want the over-the-counter marketplace to become as reputable as possible and adhere to the rules. And they have granted OTC markets pretty much everything they wanted to become more of a national exchange, so to speak, even though they're still OTC marketplace. And the market makers are the equivalent of the specialists on a national exchange. And so we're kind of counterparts to the entire process. And we want to do this because we don't want our institutional customers to be prohibited from transacting with their retail clients with Australian securities. So we're in the process of ensuring the fact that, all right, listen, we have a certain amount of time to ensure that companies in Australia who have US shareholders will remain so and can continue into the future. So that's pretty much the big point that will affect us as a market maker.
Very good. Thank you for that, Stefan. And I have to follow up because, as I said on that panel, there's a number of investors where we talked to them about, have you talked to the companies that you're shareholders in, and, what are you going to, have you talked to them to get their plans on, because you have to do something. You're holding shares in these companies that they might be just not worthless, but how are you going to exit, right? So I mean, what advice do you have? Yeah, what advice do you have for some of these investors that are holding some of these securities?
Precisely. So if you have a U.S. retail investor who owns shares in an Australian company, and every day they log on to their brokerage account and they see, well, it's bid here and it's offered there, and then you wake up the next day and it's bid 0, offered 0. So technically there's still value there, but there's no market. You need a market in order to sell the stock or buy more of the stock. And so that's really the crux of the situation, is that you have to take some action. In addition to being a market maker, we're one of the top 6 market makers on the over-the-counter space when it comes to foreign securities. But we also happen to be an approved sponsor for QX and QB. And so we can advise people, as well as Andrew, and we can actually collaborate and work together on, if they come to us or we go to them, to inform them of the sea changes that are about to occur. We could advise them on the steps that need to take in order to maintain their status or improve their status, in order to maintain what is, I believe, one of the greatest benefits and loopholes in recent US securities law, which is you are able to cross-list in the United States to access the largest capital pool in the world without having to register with the SEC. And you don't have to go through the exorbitant fees and prices and listing fees that the New York Stock Exchange or NASDAQ would impose, where you can take advantage of the wonderful value-added opportunity that OTC markets offers. And so that's why Andrew and I are here as sponsors to help assist companies in doing this. And I think that's a very valuable proposition to offer Australian companies.
Absolutely. Yeah, I mean, I know this next question was for you, Stefan, but I think Andrew could probably provide some insight here as well, as on the process and how it might be different if you want to take a gray market security and initiate a quote so that the issuer then can apply for the QX or QB. So, I mean, Stefan, we'll start with you, and then Andrew, love to get your insight on that as well.
Sure, we'll do a joint attack. So from my standpoint, we have a tremendous amount of interaction with FINRA, which is the secondary regulator after the SEC. When my traders are receiving order flow in an Australian security and it's in the gray market, it's a very cumbersome process. We have to contact two competitors to fulfill the 3-quote rule. And so we file what's called a Form 211 in order to create a US ticker symbol. And it's essentially the market maker is asking permission to FINRA, may we quote the security? And we have to go through a few things, and we have to attest to the fact that the information we receive from the company, the information that is on the company's website is accurate, audited, we believe it's reliable. And then if we jump that hurdle, they give us permission. So going forward, we can still do that, what I call the old format, or come September 28th, we can request of OTC to perform an informational review, and they're going to perform the same thing. So it's actually, in my opinion, becoming easier because we can ask OTC to perform the review, or we can ask FINRA to perform the review. And so it's almost to the point where I believe it's becoming streamlined, and it allows me to have less interaction with regulators who have one agenda versus OTC that has another agenda. And so I believe that these new changes are an extremely positive development in our OTC space. And once that happens, I think that we're going to have a waterfall of new companies from around the world, different markets, if we're able to communicate the message to them that, why would you not want to do this? What we call a no-brainer. Why would you not want to do this? So I'm extremely excited about the coming changes, and I think this will be an extreme benefit to multiple companies. Australia in particular, because Australian companies list in Australia, but it's not obviously as deep a capital pool as the US. And so cross-listing to capitalize on expanding shareholder base or potentially capital raise, there's a few more steps to do a capital raise in order to fulfill their economic, financial growth and development plans, is a complete positive. So at that, Andrew, I'll turn it over to you.
Thank you, Stefan. And it's interesting, for the biggest legal change in recent times, the broker talks about it. So I'm the lawyer. I'll talk about the brokering side, maybe. I think
it'll be ironic.
That was good, Andrew. That was good. I appreciate that.
So I mean, looking at it, for you, the investor, what's in it to it, and for the foreign companies, obviously, particularly from Australia, but I think more broadly around the world, from the Australian companies' point of view and other foreign companies, as was mentioned, the US is a deeper, broader capital pool. From an Australian company's perspective, all my clients, and I have dozens of them listed on the OTC markets, a handful on NASDAQ. Obviously, the OTC markets for Australian companies is much easier. And to Stefan's point about the information requirement, there is a rule called Rule 12G32B that permits foreign companies listed on a foreign recognized stock exchange like the Australian Securities Exchange to have their shares quoted on the over-the-counter markets at really no cost. All these Australian companies do is they apply to the OTC markets, and Violet and her team are wonderful, very helpful. And within a couple of months, they're up and running. And all they do is everything that they give to the local stock exchange, the ASX, they give to the OTC markets, and they've satisfied the information requirement. So it's actually, from a foreign company perspective, as long as they're listed, that's the key point, as long as they're listed on a foreign stock exchange, it's relatively easy to do. Now, the benefit of that from the American investor point of view is they can now have the world coming to them and their doorstep. If as an investor, you're trying to buy the Australian shares on the ASX, you need an Australian broker. You have to pay Aussie dollars. It's the Australian time zone, which is completely different. So in this way, the attraction for the Australian companies is coming to the US home market. OTC, you trade on your time zone, you trade in US dollars, you can use your own broker, you could use Stefan. You don't have to deal with the Aussies. You might even not even notice it's an Australian company, really. So that's one of the great benefits, both coming from Australia and I think elsewhere in the world. And so they're probably close to almost 100 Australian companies and hundreds from elsewhere in the world. So we hope you enjoy buying stocks of Aussie companies and other foreigners.
You know, Andrew, to follow up with you there, you know, what, I mean, you're our boots on the ground for this panel here in Australia, right? You know, so what would you say has been the reason, some of the reasons for the increased interest from issuers in Australia, based in Australia or listed on the ASX, for wanting to recently, you know, look, this has been around for a while now, right? The ability to start cross trading into the US, you know, why have you seen it recently starting to pick up steam?
That's a fair question. I think when it has become a little bit easier, more efficient, and I think Australian companies becoming more aware of how easy it is and the interest there is from American investors, and recognizing they could get greater American interest in their shares by dual listing, if you will, on the OTC QX. Already of the top Australian companies, probably 5 to 10% of the shares are owned by Americans, but there's a lot of institutional money, and this is basically broadening it out. Australia is a very resource-rich country, and probably close to about half the Australian population does invest in shares. So probably about as high as the American population, but perhaps more. But there's so many mining companies. So I think they're reaching out to get broader interest, and it does raise their profile in the US. And a lot of the more recent companies, Australian resource companies, actually have their projects in the United States, of all things. So they believe they resonate perhaps more. And as Violet said, particularly lithium companies are quite successful, hot and rare
earths, yeah.
Iron ore, gold,
uranium is very hot.
Yes, coal's the only one down in the dumper at the moment. Not out of the coal space, but elsewhere, broad spectrum of resources. So yes, the Aussie companies are quite excited. There've been a few per month, probably 2 to 3 per month. I would say.
Yeah, and just Robert, on that note, it's the Aussie companies are learning more about the OTC markets. They have been over the last year and a half. It's just a matter of education. You know, some of these companies initially thought an ADR was what the platform that the security was trading on through a depository bank. They didn't realize that the OTC markets is a trading platform. The ADR is the form of settlement, and the F-share is a form of settlement. So it's just a matter of education, and we've been doing our due diligence. The OTC markets hired me about 2 years ago to just sort of work that market and make sure that the information is out there. And I think we've been making some good inroads. And so more companies are understanding what our trading platform is, rather than the assumption that it's you know, a depository bank trading the security. It's different. So yeah, it's more education. We've been putting it out there.
Yeah.
Absolutely.
In short, Violet's been the difference. That was the appropriate answer. And also, picking up on Violet's point, one of the concerns historically is the SEC is well respected, of course, but from an Australian company's point of view, is they don't want to go through that arduous SEC registration process. Many of them don't. Have a couple underway now, but for the most part, it's a rigorous process, and it's like many things in life, cost benefit analysis. But going OTC, they don't have to, the Aussie companies don't go through the SEC registration process, because you can avail themselves of this Rule 12G32B. Everything they give to ASX, they give to OTC. So which is a high level of disclosure for American investors. You do have a very good disclosure. It's in English. Some of the words are spelt a bit funny, but very understandable.
Absolutely. Stefan, did you want to step in real quick?
I would say also, as Violet said, it is about education. And as time goes by, people learn about this opportunity. But in addition to that, now we have a track record. And so they could do their own research and think, Australian companies that decided to go OTC and cross-list 5 years ago, where are they now? And they can see the shareholder growth. And so it makes the exercise worthwhile. And so we have, the proof is in the pudding. And so I think that's what's convincing. I know from personal experience, Australian clients that I have say to me sometimes, well, can you give me an example of a company that you've worked with and where are they now? And I would always say, of course I can. Here you are. We have dozens. And so when you have proof of concept, that is a very valuable tool. And Violet and I have talked about this many times, that there are so many winning examples. And that, I think, is a very convincing point when you're talking to an Australian company about why they would want to do this, the benefits, the minimal costs, and the potential benefits. So that's what I wanted to add.
Yeah, but that being said, listing or upgrading on our, because we're not an exchange, so you're not listing, you're upgrading onto our premium platform. When you upgrade onto our trading platform, it doesn't mean that trading is going to take off. You still have to do the visibilities, get an IR firm, get a research done on your company, do the legwork. Now that everything is virtual, you make sure that you do the virtual conferences. When the world opens up, you have to get on boots on the ground. We set up the trading platform so that your investors can trade seamlessly. But if the investors don't know about you, then setting up the platform doesn't do anything for you. So you have to couple the upgrade to our premium services with visibility, with IR, with research, with non-deal roadshows. That's equally as important.
You literally took the words out of my mouth. And I'm not just saying this, look, hosting a virtual event. I mean, and one of the kind of silver linings of COVID is that I think a lot of not just Australian companies, but globally listed companies are seeing like, hey, we can access the US markets and US investors because of all the need of technology in order to do these things. There are all these virtual events, doing CEO video interviews. Again, not trying to be self-serving here, okay? So
it's okay.
Sorry. But really, I mean, like that's, I think, been kind of one of the pushes is to like, okay, well, if we can actually do what we need to do in order to get the story out there, as well as doing what we've always kind of thought of and wanted to do. And we don't have to get on a plane and go on a road show and hope it works. Now we can actually do some of these things virtually and give it a shot and get it out there. It makes the process a little bit more palatable. I hope.
Great. I would agree with that.
So, all right. So I think we got kind of the full picture here of everything that's happening. We went through our overview, talked about the new rules, what this means for international companies. I mean, from each of your perspectives, I mean, is there anything that we're missing, or is there anything, from what you can tell us that anybody who's an investor watching this right now should have in mind and think about when it comes to trading on OTC markets or international companies coming to trade as a market maker? I'd love to get your final take. Who wants to go first with that?
I'll take a swing at that.
There we go. All right.
I would say that my advice to Australian issuers that are curious about this, number one, there are tremendous resources at OTC markets. Contact them, get in touch with Violet. That's her region. And she can walk them through the procedures, the steps, the requirements. And that's the first step. Number two, one of the initial requirements to be quoted is to have a sponsor. And the sponsor's responsibility is to walk them through the next stage, whether that's creating a security through a 211 process or getting legal advice from Andrew, helping them to understand what are the ongoing requirements What are the kind of steps to try to look for? What are the possible mistakes? And just really go from there.
Very good. Violet?
So for investors, I would look at the companies that are trading on our platform. That you want to look at the pink companies, ensure that there's greater transparency and visibility in terms of their financials and their disclosure requirements. Because again, we have 11,000 securities trading on our marketplace. Not every one of them is on our QX or QB marketplace. They're on the pink sheets, but they're available for trading. You want to make sure that the companies are suitable for your requirements, and if the information is not available on our website, perhaps you call the company and you ask them for the information and explain what's going on and why you would require them to have more information out there, because it's all about transparency and disclosure and requirements, and that's what we aim to provide to investors who want to trade securities on our marketplace. So the more that you have that, the more suitable I think the security. So you just, as an investor, you always have to be careful, right?
Absolutely. That's great advice. Andrew?
Yeah, just to add to that, make it more clear, perhaps, following on both Stefan and Violet's comments, is basically stay away from these companies in the gray market. It's tough, and it's going to get even virtually. So you could have almost, I don't know, an investment that's not going to go anywhere, not liquid, I guess, if it's in the gray market. So sticking to companies, obviously on the OTC QB, the QX, or in the pink sheets that
Your pink current.
The pink current, thank you. So I mean, that's the point. And actually looking at the OTC website, you can quickly see, even if they're in pinks, it says current. Is that it? Is that what
Yes.
is that what investors should be looking for? I mean, basically, how can investors know which one's in the gray market and which ones are current?
It'll say gray market. So yeah, and if it's in the gray market, it'll say gray market. If it's in the pink current market, it'll say pink current. If there's pink limited information, so it's a very understandable for investors who just want to take a look. You'll be able to tell like the disclosure, the transparency of a particular company that you're looking at. It's either gray, pink limited, pink current, OTC QX, OTC QB.
I think we're there. So, before I let everybody go, love to please give a plug on where people can go and find more information on your firms. Violet, where can people go and find more information on OTC and contact you?
Sure. It's www.otcmarkets.com, or you can certainly contact me at vpagan@otcmarkets.com. Yeah.
Very good.
And
Stefan?
So the best place to get information on MCAP, and you can find my contact information, is mcapmarkets.com. That's plural, markets. And there's all of my contact information and my colleagues, a short bio, and that's probably the best place. And you can read about MCAP, see what we do, and see what distinguishes us from the other market makers in our space.
Very good. Thank you. And Andrew? Oh, just looking. Yeah, so Andrew here. So what is our website? Yeah. So the information about us is obviously the website, rimonlaw.com. I'm there, or LinkedIn. And if anyone has any questions, feel free to reach out.
Yeah. Thank you.
Very good. Well, thank you all so much for joining me today. I really do appreciate it. Good luck. Continue to stay safe. And I look forward to our next update, which who knows, it could be next week with everything moving as fast as it is. But really, thank you all.
Thank you.
Thank
so
you, Robert,
much.
for your time. This was enjoyable. And Andrew, Violet, thank you for your time. So we'll get together again.
Yes, absolutely. Thank you, everyone.
All right, guys.